Question 1. Commercial property insurance. What is the key difference between actual cash value (ACV) and replacement cost in a commercial property policy? A. ACV includes depreciation while replacement cost does not. B. ACV provides full reimbursement for damaged property while replacement cost only covers the cost of repairs. C. ACV is used for business personal property while replacement cost applies only to buildings. D. ACV and replacement cost are the same and can be used interchangeably. Answer A. Explanation. The primary difference between actual cash value (ACV) and replacement cost lies in the consideration of depreciation. ACV takes depreciation into account when determining the payout amount for property damage, meaning the amount reimbursed is the replacement cost minus depreciation. On the other hand, replacement cost coverage provides a reimbursement that is equal to the cost of replacing the property with new items of like kind and quality without factoring in depreciation. This distinction can significantly impact a claim settlement, as the insured may receive a lower payout under an ACV policy. Question 2. Scenario-based question. Mr. Thomas, the owner of a small manufacturing company, has recently experienced a break-in and several of his business's valuable machines were stolen. He holds a commercial property insurance policy with a $500 deductible and an actual cash value (ACV) valuation method. The stolen machines have a combined value of $10,000. After depreciation, the total ACV payout is determined to be $7,500. What should Mr. Thomas do next? They submit the claim and accept the $7,500 payout, as it is the amount of the loss after depreciation. B. Demand a replacement cost payout, as ACV is insufficient for his needs. C. Pay the deductible out of pocket, as the insurance company will not pay for losses under $10,000. D. Appeal the valuation method, requesting an increase in the payout based on the machine's replacement value. Answer A. Explanation. In this scenario, Mr. Thomas should submit the claim and accept the payout of $7,500, which reflects the ACV method of valuation. Under his policy, the deductible of $500 will be subtracted from the payout amount and the insured will receive the value after depreciation. Mr. Thomas cannot demand a replacement cost payout since his policy specifically uses the ACV method, while the replacement cost might have provided a higher payout. This would only be applicable if the policy included that coverage. It is also incorrect to assume that the insurer will not pay losses under $10,000. Deductibles apply to the payout calculation. Question 3. Workers' compensation insurance. Which of the following statements is correct regarding workers' compensation insurance coverage? A. Workers' compensation insurance covers medical costs, lost wages, and rehabilitation expenses only if the injury occurred on the job. B. Workers' compensation insurance does not cover medical costs if the injury occurs off the job but causes a permanent disability. C. Workers' compensation insurance includes coverage for employer's liability, which protects the employer from lawsuits filed by employees. D. Workers' compensation insurance is not mandatory for most employers in Massachusetts. Answer C. Explanation. Workers' compensation insurance is designed to provide coverage for employees who are injured or become ill due to their work. It covers medical costs, lost wages, and rehabilitation expenses resulting from workplace injuries or diseases. Additionally, it includes coverage for employer's liability, which protects the employer from lawsuits filed by employees due to job-related injuries or illnesses. However, if an injury occurs off the job, it would not be covered under workers' compensation. In Massachusetts, most employers are required to provide workers' compensation coverage for their employees, so option D is incorrect. Option A is also not fully accurate, as it does not explain the full scope of workers' compensation coverage, which also includes rehabilitation and long-term disability benefits if necessary. Question 4. Commercial general liability (CGL) insurance. Which of the following scenarios would not be covered under coverage was bodily injury and property damage liability of a CGL policy? A. A customer slips and falls on a wet floor in the insured store, resulting in medical expenses. B. An employee accidentally damages a client's property while delivering goods. C. The insured's building sustains damage from an earthquake. D. A subcontractor causes damage at a work site and the insured is held liable. Answer C. Explanation. Coverage under a CGL policy addresses claims for bodily injury or property damage caused to third parties due to the insured's business operations, premises, or products, while options A, B, and D are third-party claims and fall under coverage A. Option C involves damage to the insured's property caused by an earthquake, which is excluded under CGL policies. Property damage to the insured's own building would be covered under a separate commercial property insurance policy, and earthquake coverage may require a specific endorsement. Question 5. Business interruption insurance. Which of the following is most accurate regarding business interruption insurance? A. It covers ongoing expenses but does not compensate for lost profits during the period of restoration. B. It compensates for lost profits and ongoing expenses due to a covered peril that disrupts business operations. C. It provides coverage only if a government-mandated closure occurs, regardless of the cause. D. It is automatically included in all commercial property insurance policies. Answer B. Explanation. Business interruption insurance provides financial protection for lost profits and ongoing expenses when a business is unable to operate due to a covered peril such as fire or storm damage. Option A is incorrect because it does include lost profits, not just expenses. Option C is misleading since government-mandated closures are not always covered unless linked to a covered peril. Option D is incorrect because business interruption insurance is typically an optional endorsement or add-on to commercial property policies. Question 6. Scenario-based question. MS. Alvarez owns a technology consulting firm. Her company recently experienced a data breach that exposed sensitive client information. She has a commercial general liability CGL policy and a separate cyber liability policy. The breach resulted in legal claims from clients and significant costs to restore data. What policy will most likely cover the costs related to the breach? A. CGL policy will fully cover both the legal claims and the data restoration costs. B. Cyber liability policy will cover the data restoration costs, but the CGL policy will cover the legal claims. C. Cyber liability policy will likely cover both the legal claims and data restoration costs. D. Neither policy will cover the incident, as breaches are considered intentional acts. Answer C. Explanation. While a CGL policy provides broad liability protection, it typically excludes coverage for cyber-related incidents such as data breaches. The cyber liability policy, however, is specifically designed to address such risks and is more likely to cover both the legal claims from clients and the costs associated with restoring data. Option D is incorrect because breaches caused by external parties, not the insured's intentional acts, are generally covered under a cyber liability policy. Question 7. Coinsurance clause. What is the primary purpose of a coinsurance clause in a commercial property insurance policy? A. To ensure that the insured shares the cost of each claim equally with the insurer. B. To encourage the insured to purchase adequate coverage for their property. C. To reduce the premium by allowing partial coverage for specific risks. D. To limit the insurer's liability by capping the payout at 50% of the loss amount. Answer B. Explanation. The coinsurance clause is a provision requiring the insured to carry a certain percentage of the property's value as insurance, typically 80%, 90%, or 100%. If the insured fails to meet this requirement, they may receive a reduced payout during a claim. This clause is intended to encourage policyholders to insure their property to its full or nearly full value. Options A, C, and D misrepresent the purpose and operation of the coinsurance clause. Question 8. Pollution liability insurance. Under a pollution liability policy, which of the following scenarios would likely be covered? A. A factory owner is fined by the EPA for improper waste disposal practices. B. A manufacturing plant is held liable for contaminating a nearby water source due to a pipe rupture. C. An employee is injured while cleaning up hazardous materials in a warehouse. D. A neighbor sues the insured for noise pollution caused by factory machinery. Answer B. Explanation. Pollution liability insurance covers third-party claims for bodily injury or property damage resulting from the release of pollutants, such as the contamination of a water source caused by a pipe rupture. Option A is not covered because fines and penalties are excluded under such policies. Option C would typically be addressed under workers' compensation insurance, and option D does not involve environmental pollution but rather a nuisance claim which would not fall under this coverage. Question 9. Claims made versus. Occurrence policies. What is the key difference between claims-made and occurrence-based liability insurance policies? A. Claims-made policies provide coverage for claims reported during the policy period, regardless of when the incident occurred. B. Occurrence policies only cover incidents that are reported after the policy ends. C. Claims-made policies require a retroactive date, whereas occurrence policies do not. D. Occurrence policies only apply to claims made for incidents occurring within the first year of the policy period. Answer: C. Explanation. A claims-made policy provides coverage for claims reported during the policy period, provided the incident occurred after the policy's retroactive date. An occurrence policy covers incidents that occur during the policy period, regardless of when the claim is reported. Option A is partially correct, but omits the importance of the retroactive date. Options B and D mischaracterize how these policy types function. Question 10. Commercial umbrella insurance. What is the purpose of a commercial umbrella insurance policy? A. To replace primary policies and provide exclusive coverage for high-severity risks. B. To extend liability limits beyond the coverage provided by underlying policies. C. To provide property insurance coverage for large commercial buildings. D. To act as a standalone policy for specific risks not covered by general liability insurance. Answer: B. Explanation. A commercial umbrella insurance policy is designed to provide additional liability coverage beyond the limits of the insured's primary policies, such as CGL auto liability and employer's liability. Option A is incorrect because umbrella policies do not replace primary policies but instead supplement them. Option C confuses liability insurance with property insurance. Option D is incorrect because umbrella policies require underlying policies for most claims. Question 11. Deductibles in commercial property insurance. What is the main purpose of a deductible in a commercial property insurance policy? A. To provide full compensation for all covered losses without requiring any contribution from the insured. B. To reduce the insurer's risk by requiring the insured to pay a portion of each loss. C. To allow the insured to choose the amount they wish to be reimbursed for a loss. D. To ensure that only large claims are covered, excluding smaller ones entirely. Answer: B. Explanation. A deductible is the portion of a loss that the insured is responsible for paying before the insurer's coverage applies. It reduces the insurer's risk by sharing a part of the financial responsibility with the policyholder and discourages the filing of minor claims. Option A is incorrect, as deductibles specifically require the insured to contribute to losses. Question 12. Workers' compensation insurance. Which of the following is typically not covered under workers' compensation insurance? A. Medical expenses for an employee injured on the job. B. Rehabilitation costs for an employee recovering from a workplace injury. C. Wages lost due to a work-related disability. D. Fines imposed on the employer for violating workplace safety regulations. Answer: D. Explanation. Workers' compensation insurance covers medical expenses, rehabilitation, and lost wages for employees who suffer work-related injuries or illnesses. However, it does not cover fines or penalties imposed on the employer for safety violations, which are typically the employer's responsibility. Question 13. Commercial auto insurance. Which type of coverage in a commercial auto policy pays for damage to the insured vehicle caused by a falling object? A. Collision coverage. B. Comprehensive coverage. C. Property damage liability coverage. D. Uninsured motorist coverage. Answer: B. Explanation. Comprehensive coverage pays for damages to the insured vehicle caused by incidents other than collisions, such as falling objects, theft, vandalism, or weather-related events. Option A is incorrect because collision coverage applies to accidents involving another vehicle or object. Question 14. Inland marine insurance. Which of the following is an example of a risk typically covered by an inland marine insurance policy? A. A warehouse fire destroys inventory stored on site. B. A truck carrying construction equipment is involved in an accident, damaging the equipment. C. A flood damages a commercial building. D. A power outage causes business interruption at a retail store. Answer: B. Explanation. Inland marine insurance provides coverage for goods and property in transit or mobile equipment. Damage to construction equipment while being transported is a classic example. Options A, C, and D involve risks typically covered under property or business interruption policies. Question 15. Business Owner's Policy BOP. What is the primary advantage of a business owner's policy BOP? A. It provides unlimited liability coverage for businesses of all sizes. B. It combines multiple types of coverage into a single, cost-effective policy for small to medium-sized businesses. C. It is tailored exclusively for large corporations and includes custom endorsements. D. It eliminates the need for workers' compensation insurance. Answer B. Explanation. A BOP is designed for small to medium-sized businesses, offering a convenient and cost-effective package that typically includes property liability and business interruption coverage. Option A is incorrect because liability limits are defined in the policy. Option C misrepresents the target audience of a BOP. Question 16. Flood insurance. Which of the following is a true statement about commercial flood insurance? A. It is automatically included in all commercial property insurance policies. B. It only provides coverage for flood damage caused by plumbing failures. C. It must typically be purchased as a separate policy or endorsement. D. It is only available for businesses located outside of flood zones. Answer C. Explanation. Flood damage is excluded from standard commercial property insurance policies and usually requires separate coverage, either through private insurers or the National Flood Insurance Program (NFIP). Options A, B, and D misrepresent the availability in terms of flood insurance. Question 17. Directors and officers DO insurance. What type of risk does directors and officers DO insurance protect against? A. Employee injuries sustained during work. B. Claims of mismanagement or wrongful acts against company executives. C. Damage to company-owned vehicles. D. Losses resulting from product defects. Answer B. Explanation. DO insurance provides coverage for claims made against company executives for alleged mismanagement, negligence, or wrongful acts in their official capacities. It does not cover physical injuries, property damage, or product liability. Question 18. Liability for independent contractors. A business hires an independent contractor who causes injury to a third party, who is typically liable. A. The independent contractor's liability insurance policy. B. The hiring business's commercial general liability (CGL) policy. C. The injured party's personal health insurance policy. D. Liability is shared equally between the contractor and the business. Answer A. Explanation. Independent contractors are generally considered responsible for their own actions, and their liability insurance would typically respond to claims. However, if the hiring business exercised control over the contractor's actions or was negligent in hiring, the business's CGL policy might also respond. Question 19. Legal liability coverage form. What does the legal liability coverage form in a commercial property insurance policy primarily cover? A. Property owned by the insured. B. Property of others in the insured's care, custody, or control. C. Loss of business income due to covered perils. D. Damage to public infrastructure caused by the insured. Answer B. Explanation. The legal liability coverage form provides coverage for damage to property owned by others that is in the insured's care, custody, or control if the insured is legally liable for the damage. Question 20. PLI Employment Practices Liability Insurance. Which of the following risks is most likely to be covered by employment practices liability insurance? A. A discrimination lawsuit filed by an employee against the company. B. A product liability claim involving defective goods. C. A data breach exposing customer information. D. A slip and fall injury sustained by a customer in the store. Answer A. Explanation. E. PLI covers risks such as discrimination, wrongful termination, harassment, and other employment-related claims brought by employees. Options B, C, and D pertain to other types of insurance coverage. Question 21. Business interruption insurance. What does business interruption insurance typically cover? A. Physical damage to business property due to a covered peril. B. A loss of income and operating expenses during the period a business is closed due to a covered peril. C. Liability claims resulting from customer injuries. D. Inventory loss due to theft or vandalism. Answer B. Explanation. Business interruption insurance compensates for lost income and ongoing expenses, e.g. rent, utilities, when a business is unable to operate due to physical damage caused by a covered peril. It does not cover direct physical damages, liability, or theft-related losses. Question 22. Builder's risk insurance. Which scenario is most appropriately covered under a builder's risk insurance policy? A. A contractor's employee is injured on the job site. B. Equipment is stolen from a contractor's truck off-site. C. A partially constructed building is damaged by a storm. D. A client sues the contractor for poor workmanship. Answer: see explanation. Builder's risk insurance covers property damage to buildings or structures under construction. Injuries, theft, or lawsuits for workmanship are covered by other types of insurance, such as workers' compensation, inland marine, or liability insurance. Question 23. Umbrella insurance. How does a commercial umbrella policy enhance a business's liability coverage? A. It provides coverage only for specific perils excluded from primary policies. B. It extends coverage limits beyond those of underlying liability policies. C. It replaces all primary liability policies with a single high-limit policy. D. It guarantees coverage for any type of claim regardless of exclusions. Answer: B. Explanation. A commercial umbrella policy provides additional coverage limits when claims exceed the limits of underlying liability policies, such as CGL or auto liability insurance. It supplements rather than replaces primary policies and still adheres to exclusions. Question 24. Cyber liability insurance. Which of the following is typically not covered under cyber liability insurance? A. Costs associated with data breaches, including notification expenses. B. Fines imposed by regulatory authorities for failing to protect customer data. C. Business income lost due to a cyber attack causing system downtime. D. Physical damage to computer hardware caused by a fire. Answer: D. Explanation. Cyber liability insurance covers expenses related to cyber incidents such as data breaches and lost income. Physical damage to computer hardware is typically covered under commercial property insurance. Question 25. Professional liability insurance. What is another common name for professional liability insurance? A. Errors and omissions (EO) insurance. B. Business owners policy (BOP). C. General liability insurance. D. Commercial umbrella policy. Correct answer: A. Explanation. Professional liability insurance, often referred to as errors and omissions (EO) insurance, provides coverage for professionals against claims of negligence, errors, or omissions in their work. The other options refer to different types of insurance coverage. Question 26. Pollution liability coverage. Which type of insurance typically covers third-party claims arising from environmental contamination caused by a business? A. Commercial general liability (CGL) insurance. B. Pollution liability insurance. C. Business interruption insurance. D. Property insurance. Answer: B. Explanation. Pollution liability insurance provides coverage for third-party claims of environmental contamination, cleanup costs, and related damages. Standard CGL policies often exclude pollution-related claims. Question 27. Coinsurance clause. What is the primary purpose of the coinsurance clause in a commercial property insurance policy? A. To ensure the insurer fully covers all losses regardless of policy terms. B. To encourage policyholders to insure their property for its full value. C. To prevent insurers from paying claims for underinsured properties. D. Both B and C. Answer: D. Explanation. The coinsurance clause incentivizes policyholders to insure their property to a specified percentage of its value, e.g., 80%. Failure to meet this requirement can result in reduced claim payments, ensuring fairness in premium calculations. Question 20. Key employee insurance. What is the primary purpose of key employee insurance? A. To provide health coverage for top executives. B. To compensate the business for losses resulting from the death or disability of a vital employee. C. To offer retirement benefits to key employees. D. To insure against claims of discrimination by key employees. Answer: B. Explanation. Key employee insurance helps a business recover financially from the loss of a critical employee whose expertise or leadership is vital. It is not a health or retirement benefit for employees. Question 29. Auto liability insurance. Which of the following is an example of a claim that would be covered under auto liability insurance? A. Damage to the insured's vehicle after a collision. B. Medical expenses for a passenger in the insured's car. C. Injuries to a pedestrian struck by the insured's vehicle. D. Theft of the insured's vehicle. Answer: C. Explanation. Auto liability insurance covers damages or injuries the insured causes to third parties. Medical expenses for passengers might be covered under medical payments or personal injury protection, while vehicle damage or theft requires comprehensive or collision coverage. Question 30. Business personal property coverage. Business personal property coverage under commercial property policy typically excludes which of the following: A. Furniture and equipment inside the business premises. B. Inventory stored on site. C. Customers' property and the business's care. D. Buildings and other real property. Answer: D. Explanation. Business personal property coverage applies to movable items owned by the business, such as furniture, equipment, and inventory. Buildings and real property are covered under the policy's real property section.